Jonathan Worsley.
Great, thank you, Jennifer. Well, good morning and welcome to our third day of the Global Restaurant Investment Forum, our second morning here at the Conrad Dubai. What a pleasure to see so many of you here. Just looking at you right now, I can see that most of you have just returned from the Clay Dubai. And the other half of you are still there, quite obviously. It was Todd English who said yesterday on that Q&A with Duncan Fraser-Smith, he said, work is about enjoyment. It's about having fun. And I think some of you probably took that to the extreme last night. And it was a very enjoyable and great fun last night. Speaking of which, I would just like to show our appreciation to Duncan Fraser-Smith, who organized the reception for us last night at Clay Dubai from Global Hospitality Services, CEO of Global Hospitality Services. Duncan, I don't know if you're in the room, but... he's still there. Sorry, he's still there. Exactly. But anyway, if you can please show your appreciation to Duncan and his team for last night's reception. Oh, there you are. Thank you, Duncan. And Duncan, thank you so much also for that inspirational Q&A with Chef Greg Malouf as well. It was fascinating to hear his views on cuisine in Dubai, and it's great to have a celebrity chef working behind the kitchens and hearing what it's really like. So thank you again. I must say, yesterday, this is absolutely my favorite conference. We run 8 conferences now, and this one, which we started last year in the first year, this year we've made, I think, some really big steps to get to where we are. And that goes down to the hard work, the inspiration, the enthusiasm of not only yourselves, but my team, who I think really enjoy working with you on this event. And it just showed yesterday, I thought we had some fantastic speakers. I love the Innovation Den. I mean, it used to be Dragon's Den, but Jennifer, I think we should call it Jennifer's Den. I love the idea of having those speakers. And it was Mana Fernandez who spoke about telling the story. You know, we should all have a story to tell. And our story really is to let you, to provide the opportunity for you to tell the story here. And that is something you've certainly been doing. So thank you very much for that. But just a quick thank you to my team, to Jennifer, to Mala, to Joe, and to Annie. Thank you so much for everything you've done to really make this event possible. To Emirates Academy, who have been helping us out throughout the conference. Thank you to them as well. So this morning we've got a fantastic series for you, and this morning we've got Philip Shepherd, who is a partner of PwC, who's going to be talking about transactions in the Middle East, and delighted that Philip has recently done a significant transaction in the region, so well done to you, Philip. And then we've got sessions on investment, we've got sessions on crowdfunding. It's great to have our Russian friends here who are going to speak about what's happening in Russia. So our host this morning, Philip Shepherd, partner of PwC, head of hospitality and leisure at PwC. Welcome, Philip. Thank you.
Give us their insight into how they look at investments in the restaurant sector. And then after that, we've got some businesses guys who've built businesses in Russia and have taken these around the world and developed new concepts around the world. Very interesting couple of stories that we can understand. But what I really want to sort of start with is, I guess, pulling together my thoughts on what's been happening around the M&A environment in the GCC, in the Middle East, in the Gulf states in particular, and what's driving that, and some of the lessons learned, and what I've kind of seen coming into this region from, I guess, doing deals in Europe in the main. So when we sort of conceived this session, this was back last year, there were some really major deals that were happening in this region, mainly in the fast food sector. And I was hoping that when we came to this conference, they'll be closed. Unfortunately, they're not. But what has been completed, and I guess there's a bit of a theme here, a couple of years ago or 3 years ago now, Domino's was acquired by Carlyle, quite a substantial transaction, and from a US private equity firm. That was quite an interesting move into this market. We've had NBK acquiring Shakespeare & Co., and we've had the sale of Pancake House Group, but relatively small transactions compared to the ones that are still ongoing. Americana is owned by a Kuwait group. It has the franchise for KFC across most of the region, Pizza Hut, Hardee's, TGI Fridays. This is a $1 billion+ deal, and it would have, I kind of guess, changed the landscape here from an investor's perspective. It's still ongoing. It hasn't failed or it hasn't quite succeeded. And I think one of the themes here is that some of these deals take a long time to close. But the players who are looking at that deal are the major bulge bracket private equity firms like CVC, KKR, Blackstone. And this would have, I mean, we've been lacking that kind of activity in this region across all sectors, and that would have been quite transformational. Azadea, big group holding many retail and hospitality brands, that's a transaction that's still ongoing. And Kudu, I mean, this is probably now into its first anniversary of the deal. This is the largest burger chain. It's a kind of a Saudi equivalent of McDonald's, very large in Saudi Arabia, principally in Saudi Arabia, and that's still ongoing. So there's a lot of interest in restaurants, particularly fast food restaurants in the region. And why is that? Well, this is a sort of series of predictions, but we're looking at this market growing in value terms at about 7% a year for the next 5 years. So almost 50% growth. And I think what was interesting, if you think about all the conversations we had yesterday, and actually not too much conversations was had about this market, but it's Saudi Arabia. Just under 50% of the value of the food service market in this region is in Saudi Arabia. Possibly a challenging place for many people to think about how you do business, but it is substantial, followed close behind by the UAE. And UAE we're seeing as probably the fastest growing of all the Gulf state markets. What's driving this growth? Well, we've got in the region quite a substantial growth in GDP. May change slightly going forward because we're kind of unclear how the oil price is going to pan out, but the Gulf states are fundamentally phenomenally wealthy and built up huge amounts of reserves, so they're not going to start changing their investment in infrastructure and in new businesses. In fact, the real challenge for this region is the lack of diversity, and what the oil price fall has done has encouraged many of the governments, Saudi and in Kuwait and in Qatar, to think about how they diversify their economies and invest in other sectors. So you've got an increasingly fast-growing economies and increasing personal wealth. The disposable income of many of the population in this region is growing very fast. You've got a fast population growth, and underpinning or underlying in that population growth is this bubble of people born maybe 20 years ago who are coming into that sort of 25 to 35 age bracket. And this is kind of people without children, high spenders on casual dining. So you've got this great opportunity in that. Certainly in Dubai, UAE as well, huge growth in tourism. I mean, it's doubled in the last 5 years and expected to double again by the time we have Expo 2020. 25 million people coming into the region. Enormous growth forecast and huge investment going on right now across all of Dubai and Abu Dhabi in new hotels, building theme parks. People got to have something to do. They can't just sit there on a beach and eat, and try and increase people's average stay, which is about 2.5 days for people who actually stay in the region now, to move that up to, we'll get that to a week, and sort of become a bit more, certainly around the leisure side, more like an Orlando, where people are coming here for the leisure. And we've had rapid urbanization. I mean, this state, this country has changed dramatically in the last 30 years. 84% of people now live in big urban. And I think the whole region is challenged around health. I think if there's another sector other than hospitality and leisure to invest in, it is the healthcare sector. And another thing that's happening, quite substantial growth in, is around the sort of online ordering of food. We're seeing rapid growth there across the region, market value of about 220 million. So what are the main challenges? Well, we heard a lot about this yesterday, and I guess people who are managing restaurants here, and we heard actually in other cities, is rents are just increasing far too fast, really, to my mind, be sustainable. But they've gone up, 12% over the second quarter in 2014. You've got a real challenge around rising food prices. We heard this from Greg yesterday, that there's little indigenous homegrown food. It's all got to be imported. That's expensive. And also you have the quality issues that go with that. And then you've got an issue around space. Where can you build your restaurants? And certainly in the UAE, it kind of gets very defined. You've got some really top locations, and you'll have all have seen or been to Dubai Mall, and then you've got a lot of the malls which are really kind of the footfall is really low. It's a very, very wide range, and trying to find the right place and the right space with space can be a challenge. So just to wrap up, and this is sort of apologies to T.E. Lawrence of Arabia, and my 7 pillars of wisdom for people coming to invest in this market. I think you've got to be extremely aware of the culture. Don't be deceived that Dubai represents the Middle East and represents the GCC. It doesn't, and it certainly doesn't represent Saudi Arabia, where you have clearly no licensing at all. Most restaurants have to be segregated and have different family areas. So adapting to the cultural side of in these markets is very, very important to understand. We talked a lot yesterday about I guess the feeling here that everything you've got to have established brands, and there's no doubt that even though there's growth of sort of local concepts, most investors here are fairly risk-averse to doing something new and would much prefer to bring in something that has been trialed and tested somewhere else. And they're also quite fickle around brands. And you just have to walk around Dubai Mall and look at the thousands of, hundreds of shops selling every designer good here. It's a very brand, designer orientated market. We talked a bit yesterday about people. Real challenge in getting enough good quality people into the sector. I know this is an issue worldwide, and we talked a bit about training yesterday, but it's certainly a big problem here in the region. And I think a lot of people who come and visit these really nice restaurants here in Dubai always come away feeling that something was possibly missing. And even though the service can be done with a smile, it just doesn't seem to be as instinctive as it may be in people's home countries. So a challenge. I think it's vital to have local partnerships. I think understanding how this region works or these countries work is very important. And they've grown from very small populations with a few key families to the size they are today. But those families are still the vital connectivity to all parts of government and the private sector. And I think having partnerships with these family groups, these businesses, is a kind of a key to success here. Access to locations, well, that is probably through that route of the partnerships. It's very hard to find good locations unless you're connected to the right people. And probably generic to many restaurant concepts, you've got to consider the scalability. So if you've just considered whether it's going to work in Dubai and you're looking for something much, much larger, you've really got to do your homework as to whether it's going to work in Kuwait, in Qatar, and particularly in Saudi Arabia. If you can crack Saudi Arabia, it's a gold mine. And we heard a lot about this yesterday as well. Doing deals in this region, you've got to be patient. These things don't happen overnight. They don't work at the speed that we're used to in Europe and the USA. The Arabs have been trained in the soup. They know how to do a deal. They're probably the best deal doers I've come across, and they will hang on and wait till you blink first. And if you get impatient, and if you display sort of angst and anger, it's not going to work. You've got to treat this as par for the course and be polite and humorous. So that is just a kind of quick trot through of some sort of thoughts on doing deals here. I think there's huge opportunity, but you've got to kind of come in with your eyes open. So without further ado, I'd like to welcome up onto the stage my three panelists, Mark Blazer, Paul Campbell, and Sammy Dowd. Thank you, gentlemen. Well, let me first just introduce them. They're covered in your brochures. But on my left is Sammy. He's the chairman and founder of Gourmet Gulf, one of the leading F&B businesses in the region. They've got a number of major brands. I mean, you're a hero in my household, Sammy, because of Chicago Pizza Kitchen, which tragically was closed for a few months in Dubai Mall as you did a refurbishment, which caused a lot of angst in my family. And you've got Yo Sushi and a number of brands across the market. And I think Sammy will be giving us some guidance to how he views, particularly sort of some of the franchisors that are coming into this market and kind of what he's looking for when you invest in the UAE. Alongside him is Paul Campbell. Paul is a living embodiment of how an accountant can make an excellent restaurateur. He was trained at PricewaterhouseCoopers to an inch of his life, and he's now, having sort of had a period of running Pizza Express and Gourmet Burger Kitchen and a number of other brands in the UK, is an investor in a restaurant called Hawksmoor. If you've never been there, outstanding high-end steak restaurant in London, Tortilla and Vinoteca and a number of others. And high reputation for, really sort of looking at these opportunities. I think probably you must turn away 1 in 20 of these, Paul. And so it will give us good insight into what's going on there. And then Mark Blazer runs Overture Investments, is an investment banker of old, but runs funds focusing on investing in the hospitality and leisure sector. If you've read the profile or sort of looked up online, Mark didn't sort of muck around at the bottom. He went straight to the top. He's invested in Noma, the #1 restaurant in the world. It's in Denmark. I haven't been there yet, but I'm going to be keeping close to Mark for the rest of the day. It's a phenomenal success story, and he's also then looking at other opportunities. And I guess through experience has sort of worked out what's going to work for him and what might not. So maybe, I think just as a start to understand, kind of building your investment roadmap, and I'll probably, Paul, I'll start with you. You must see many, many plans. You get approached by many, many people. What would be the sort of kind of top 3 things that really would kind of rock your boat when you look at these plans and would want to take it forward?
I've got a slightly kind of corny way of describing this. I look for 3 illities, and the 3 illities I look for is the concept that's being described to me going to be scalable? Because from an investment point of view, the way you make money out of these sorts of businesses is to make them bigger. You can have a single restaurant that makes a certain amount of money, but from an investment perspective, they've got to scale. So do they have scalability? My second illity is durability. So is it going to be popular today, tomorrow, next month, next year? But we're signing leases for 25 years in the London market. So is it going to be durable? So it's not a fad. It's not something that's going to go out of fashion all of a sudden. And then the third illity is management ability. So are the people who are kind of putting the plan to me credible? Are they dedicated enough? Do they have what it takes to go on, as you described, quite an arduous journey? Building out restaurants is hard. So that's my kind of checklist.
Yeah, your checklist. Mark, how about you?
Yeah, I think it's exactly the same for me. But I'm not smart enough to know what works from a blank piece of paper. So I only invest in things that are already proven and profitable and successful, but that haven't yet scaled. And I look at scale not just as a matter of bricks and mortar. Can they open more units of the same thing? It's also, can they create ancillary opportunities in media, digital, publishing, and other concepts? Do they have the credibility to go into other concepts as well?
Okay, excellent. And Sami, when you look at franchise possibilities and other brands coming into the region, what are you looking for? How do you sort of do diligence these as a first blush?
Well, firstly, definitely scale. You know, if that's the first thing we'll look at and see how many of these can we open. You know, like Paul said, yes, you know, you can open one, and it may be a success, but really the real money is in being able to scale these across the region. The second thing is, you know, there are many brands I've looked at, I've met with, but when I meet with the guys behind the brands, I soon realize that as a company, they're not set up for franchise. So you know, so we've got to I've got to really be convinced that these guys are serious about franchise, and therefore they're going to support me. Because at the end of the day, without that, we're not going to be a success. So that's something very important, commitment from the franchisor. You know, the franchise business is, for the franchisor, it's not necessarily kind of the golden shoe. It's an investment also. So we look at that. And at the same time also, look, we operate across the region. And there could be some brands would work very well in Dubai, but may not work in Saudi. So you know, it's got to be a brand that we're able to open across the region because there's a market for it.
Okay, excellent. And we've all seen The Apprentice, and when it gets to that sort of round 8, and people have to present their business plans, and they meet Lord Sugars or Donald Trump's sidekicks, they usually get roasted for putting in some pretty spurious stuff. Guys, when you see these plans, what would make you consign it to the dustbin without really much further consideration? And give me an example of something that either a concept or an approach that really you would advise nobody to take if they're going to come and try and build an investment case with you.
Well, my focus is predominantly on personality and the team, the management team. And so I don't look at concepts per se, because this is an investment that's all about execution, more so perhaps even than ideas. And so if the management team doesn't have an ambition to grow, like lots of chefs are perfectly happy having one restaurant, spending all their life in the kitchen, that's not for me. So it's that desire to grow, and then a proven track record and ability to execute in the past.
Okay.
Yeah, I would totally agree with that. Again, you know, really kind of grill the management on their appetite. You know, restaurants is a sexy thing, so everybody wants to open a restaurant, right? It's kind of cool. And in London at the moment, the kind of joke is everybody's a restaurant entrepreneur. But of course, we all know it's really hard and really challenging. So I would kind of drill into that. I think the other thing that I'm very wary of is initial projects where there's a huge round of funding and it's all going out the door on bricks and mortar and fit out straight away, because you know that's an important part of the business, but it's not the be all and end all. And I think we've all seen things where you can kind of spend that much or you can spend that much, and I believe there's a kind of diminishing return between there and there in terms of capital expenditure. So from an investor, I want to know that my money is being spent very smartly, rather than just some lavish vanity projects which you see from time to time.
Time to time or a lot?
Yeah, I think you see them a lot in this sector, but you know, I don't really go much further than the first page if I think it's a vanity project.
Sami, I guess people must have, given your reputation, people must approach you. What is it the same? Is it you've got to believe in the people who've come through? Or do you think people see franchising as just easy money, and you're testing their mettle as to whether you said before they're going to stand behind it, but I guess how do they do that? How do they prove to you that they are
Yeah, absolutely. I think you've got a lot of restaurant brands out there that look at franchising and think, okay, this is kind of a golden ticket, and we're going to go out and charge them a bunch of money and sit back and receive royalties. And so how do we test that? So we've had many cases where we've met with great brands, but when you start really kind of asking those questions of, looking at their commitment, are they going to come out and support you? How much time are they going to spend with you? Do they have all their operation manuals in place? But is their plan just to give you those books, or are they actually going to come and spend time with you and train you on the ground? These are the things we look for. The other thing is, which will probably, makes me very unpopular with franchisors, is I generally do not like to work with franchisors who want a big ticket up front, right? Mm-hmm. Those that go into it thinking this is a partnership. You make money, I make money. You don't make money, I don't make any money. Those are the guys I want to work with. And frankly, today, I'm in a very fortunate place that all my franchisors do think like that, or the majority of them at least do.
So Mark, when we spoke earlier, you've kind of come up with you've worked out your investment kind of hypothesis. Maybe you can share with that how, what your focus is and how you've, I guess, and also maybe explain how you sort of ended up in Noma and got comfortable that was going to be a success.
Yeah, well, I think it's important to learn from your failures, and I've had plenty along the way. But I look at restaurants as an alternative asset class that you can kind of categorize in three pillars. You've got small, independent restaurants backed by friends, family, local, vanity money. Then you've got hugely scalable chains that every private equity firm, some that you mentioned earlier, are trying to go after. But in between, if you're a successful restaurateur and you're becoming an institution, the durability has been proven, there is no liquidity event for you. There is no exit. And so what we do is we focus on those guys in between that have a desire to grow, that have kind of tapped out their individual friends and family money and don't have an expertise to grow, that they want to partner with us. That realization came to me after I bought the rights for Le Pain Quotidien in India. And I realized that they have a much better side of the trade than I do. So I want to own the IP. I want to be able to charge the rents to franchisees, if you will. And then the other lesson was from an individual investment that I made in a very, very well-known restaurateur who will remain nameless here, who totally mucked it up. And then I realized I'm not smart enough to know from a blank piece of paper what will and what won't work. But I know that I want to own the IP, and that kind of got me to the thesis where I'm only doing things in proven, profitable, successful institutions that have not yet scaled. And that's a very small number, and Noma is a pretty good place to start.
Yeah. So when the Noma opportunity came out, how did you get yourself comfortable that this met the criteria that we've been discussing about scalability, durability, that it was going to last? Yeah. I guess, and I guess what were the risks that you saw when you made that investment?
Well, it's clearly at this stage a key man risk issue. Yeah. Rene Redzepi, our chef, is very well known, and I'm dependent on him being happy. So my business is as much talent management as it is hard-nosed investing. But because he's a well-known entity, I could mitigate my risk by doing publishing deals, media deals, pop-ups, putting his name on products, building a business case around the restaurant. There may only ever be one Noma, but there's lots of other ways to make revenues. And the question is, does Rene have the desire and the credibility to create Noma Light or something entirely different? And he does.
Yeah. The elevated fine dining that we heard about yesterday. Or maybe
or the exact opposite end. Right?
Yeah.
Does Rene have the credibility to feed the masses?
Yeah.
And I think he does.
Excellent. So, Paul, you've taken a sort of a different investment strategy and have tended to be more in the casual dining area. What would you be looking for in the sort of more concept side rather than?
Well, traditionally, casual dining in the UK is where most of the action has been, going back the past 15 or so years. But one of my more recent, and certainly it's been a fantastic investment and a fantastic journey, is not casual dining, it's Hawksmoor, which is we charge 65, 70 pounds a head for a meal, so it's kind of approaching fine dining in terms of its price point. The nice thing for me as an investor, it's actually relatively simple because it's a premium steak offer. The product has amazing provenance, but the kitchen process is relatively straightforward. So we don't have the same kind of chef risk that you'd have in a kind of celebrity chef type business. And so, that surprised me actually, that, I could find things that were beyond the normal casual dining price point that you could still build a case for scaling the business. I thought that was very interesting yesterday, though, that this idea that in the States, casual dining, which has been the prevalent growth segment, is now under pressure. Yep. And I suspect, like most things, that will come to the UK, because if I look at the UK market, I think the casual dining segment is quite complacent. It's been where all the money's been, it's been where all the expansion has been, and I think you've probably got too many concepts now fighting it out. So I would expect there to be quite a lot of change in the UK in the next 5 or 10 years.
I was interested when they were talking about the elevated fine dining and elevated casual dining. But I had a concern was that all these things start being kind of relatively unique, but because the investors need scale, you can quickly dilute that uniqueness. And just because now you've done something a bit different to casual dining, added different service layers or whatever they were offering, doesn't that very quickly become ubiquitous, and that just becomes another form of casual dining, and it loses that premium?
I think the big thing we haven't talked about is the customers. The customers' expectations are just getting higher and higher all the time. I think of it as a series of kind of 10-year groups. So each decade, you've got a bunch of kids coming through and enjoying food, and no doubt, kind of, we're guilty of taking our children to far too nice restaurants. So their expectations are to increase. So I think to meet that demand, we have to continually elevate what we're doing.
So how do you make enough profit? I mean, one of the things that was said yesterday was that I can't remember who said it yesterday, but the balance had moved towards the customer, and the restaurateur was struggling. Not struggling necessarily, but it was finding quite a lot of pressure on margins. We talked about the rent yesterday. We just talked about it just now. If you're having to add in more kind of service layers and high quality service, how are you seeing this in some of your markets about the pressure on margins? Sammy, how are you seeing it here in the?
I think here and across the region, we operate in an environment where there's the price elasticity is there. And so we're actually, of course, prices, costs are going up every year, be it rent, which is a major factor right now, food costs, labor, so on and so forth. But we're able to, in a smart way, increase our prices. Not too much, but just enough to cover those increases in costs. So we protect our margins. But last night at dinner we were talking about, in Dubai in particular, you're getting used to spending much more money when you go out because there's so many new restaurants opening. They even could be at a fine dining level, but they've just become so much more expensive than 3 years ago. So right now, you can go to casual dining, and where in the past you would spend, I don't know, $20 a head, it's okay to spend $30 a head. You don't think anything of it. And so from a consumer standpoint, I think everybody's expectation is just, okay, I'm gonna go to the mall, and it's gonna cost me $30 for one person.
Right. So you've been able to keeping
correct.
Keeping margins.
Yeah.
Good.
I mean, you have to protect your margins, right? Mm-hmm. Especially in an environment like well, I'm going to say again, Dubai or even some of the other countries, the costs are just going up substantially every single year. You know, you need to protect your margins, otherwise, before you know it, you're not making any money.
Yeah. And gentlemen, when you look at these, I mean, you've obviously looked at businesses that are already in operation. Often, a lot of these, as we said, they've been set up by people who've had the passion for the theme that they're pushing for, but maybe they're not intrinsically strong business people. What are generally the mistakes that you've seen people do when they're sort of setting up their restaurants, and the things that you who come in, I guess, with a much more dispassionate commercial eye can help sort out? What's generally Paul, what do you...
I think a big risk in this sector is it's got a big crash and burn rate, the restaurant industry. And in fact, when I do a presentation, I use some stats from the States, which, if you read these stats, you'd never invest in a restaurant business in your life. You'd be crazy to, because the failure rate is huge. And I think a big part of that is the fact that it's an emotional industry, it's a fun industry, it's an interesting industry. And I think sometimes that can go to people's heads. You know, what tends to happen is a restaurant gets launched, it gets lots of lovely publicity. That's an enjoyable thing. It starts to make money. It wins a few awards. It gets great reviews in the press. And if the founders forget it's a business at the end of the day, that is a big warning sign to me. And it's getting back to this thing that it's not a business if it's only busy for a year or two. And we've all seen restaurants that are madly busy for a period. You know, in the UK, you're signing a 25-year lease. So what I interrogate the management on is, you know, are they going to be serious enough about this? They've got to have all the emotion, they've got to have all the fun, the flair, and the rest of it. But it's a business at the end of the day. So I have this expression, proper business. You know, can it become a proper business? And I see a lot of things that perhaps aren't proper. They're interesting businesses, and I love it as a customer. But is it going to turn into a proper business?
Yeah. Mark, in the States, and I'm saying this just with a bit of a hypothesis, but during sort of good times, banks are kind of desperate to lend money, and people are very keen to take their money and maybe expand too fast. And Paul was mentioning the US, you see quite a high failure rate. Is that purely the fact that the people have got it wrong, or are the banks just lending too much money?
No, as a matter of fact, I think banks, even in good times, are not lending to startups.
Okay.
So it's not driven by easy access to money from a debt perspective. There is easy access to money from a vanity perspective. Lots of restaurants can be funded one-off by a circle of friends.
Yeah.
So there are enough people out there who think it's a little bit of fun. And so you see people that are approaching this not as a business, but as an art project.
Yeah. Okay. And Paul, in the UK, I mean, with private equity taking quite a lot of interest in this sector, are they over-leveraging?
You're beginning to see debt come back into established businesses which have got a cash flow. Pre-crash, you were seeing multiples of 5-6 times EBITDA going into transactions, which then fueled a total EV value of maybe 12 times EBITDA. I think the worrying thing at the moment, and it's something I've been banging on about a bit in the UK, and it suits me, I guess, as an investor, is I think there is a bit of a bubble on valuations. I think there's a bubble on property rents, as Sammy was saying, and I think there's also a bubble on equity valuations, because the banks are back in the market in the UK. They're lending maybe 2 to 3 times EBITDA on an established cash flow in a business, but already you're seeing people valuing their businesses at 10 times EBITDA. So there's kind of 7 times of equity in there, compared to even pre-crash, it was probably 5-6 times.
Yeah.
So I personally think there is a bit of a bubble on valuations, but there's huge appetite to invest. You know, it's seen not just by private individuals, but also by the private equity community. They love investing in restaurants. They can see them, they can see the cash flow, they can look at lots of examples of great businesses that have scaled. There seems to be a massive appetite to do secondary buyouts. So, all these things are kind of fueling and encouraging valuations.
Excellent. Now, 6 months ago, Paul, when we spoke about this, you articulated your investment hypothesis. It was pretty much kind of established businesses that had some establishment that you could look at how they were going to roll out. But then you told me yesterday that actually you've broken your own rule and you've gone into 2 new concepts.
Yeah.
why. And then I want to sort of lead on to thinking about some of the stuff we heard yesterday. Lots of concepts came out, and kind of I want to sort of juxtaposition this sort of kind of, it felt like designed by boffins concept versus coming out from the bottom, you know, people come out with their own propositions because that's what they really feel passionate about.
Okay, so I've invested in 2 new concepts recently, and why? Partly because of the bubble in valuations, because I got a bit cheesed off with seeing young concepts that were overvalued. And as we know, you've got one restaurant. There's still an enormous amount to do to make it a proper business. But if somebody's saying to me, I think that's worth 10 times EBITDA or next year's EBITDA, it's just not on as a valuation. So I guess you kind of go earlier, and the ultimate is you go into a startup, and I happened to come across 2 people that I knew very well. I believe their business plan. I interrogated it hard, and we'll see whether kind of breaking my rule was a good idea or a bad idea.
Yeah. And Sammy, on concepts, we had a brief chat, and it was a little bit of a theme over the last yesterday about, particularly here in the region, about you know, the brands coming in, and usually coming in via Europe, so wherever they came from, they had to be trialed somewhere else first, versus building something homegrown. And what would your feeling be about doing something homegrown and sort of starting concepts yourself?
You know, I would say it's definitely the trend in the region right now. I think it started in Kuwait, and it's kind of gone into Saudi. It's definitely come here. Look, I think it's a fantastic thing. I'm a big supporter of homegrown brands. Have we done any? No. You know, are we going to do any in the near future? No. But that's also because, you know, if I have to be honest with myself, I don't think, I definitely don't have the creative mind for it. And I don't think many new concepts popping up around Dubai, which are phenomenal. And it, you know, for me, I look at it as an opportunity to maybe go in when there are 1 or 2 units and try and kind of bring them on board. But as Paul said, there is also a, you know, this region suffers from the same things I guess the UK suffers from. You know, the restaurant business is a sexy business. Everybody wants to be in it. And so some crazy, crazy valuations. People are willing to pay, you know, obscene amounts of money just to be part of this restaurant world.
Do you think there's still too much sort of trophy gathering that goes on here in the region?
Yeah, absolutely,
Yeah.
absolutely. And I think again it comes down to, you know, people look at the restaurant business as something very simple. You know, oh, it's a restaurant. We could, exactly, it's easy. We can set it up and it works. And as I'm sure a lot of you know, it's probably one of the hardest businesses to be involved in.
Yeah. Yeah. Okay. So bring it to home, Mark. Investing in Dubai. A lot of the people in the audience have been asking questions during yesterday about this market, and we heard quite a bit of commentary last night from Greg about, you know, his setup. What do you see opportunities here, or what do you think are the challenges of coming into Dubai, UAE?
I don't see opportunities yet for our thesis.
Okay.
But I don't think that will last forever. I think there will be opportunities in the next couple of years. I think as homegrown concepts become successful with the potential to expand outside, I think that will happen. It's a matter of time.
Mm-hmm. Okay. What are the challenges for you? What's sort of putting you off?
Well, it's not so much. Nothing is putting me off per se. I'm geographically agnostic. Okay. I just haven't seen the right opportunity here yet. Okay. But I believe in this region. I believe in the growth of this region. Yeah. I think consumers are incredibly sophisticated here. I think the market offerings haven't yet tapped into that sophistication because there is safety in taking brands from outside.
Yeah. Paul, from your perspective?
Well, I've traded some things here before. I was very lucky in that I had an amazing partner. apart from his choice of football team. He's a wonderful partner. Yeah, I would do it again. At the moment, I'm involved in about 8 different restaurant businesses. I think only one of them is ready to look at the market. And I'm sure they will look at this as part of their international strategy. Yeah.
I'm interested, I know it went back a couple of years ago, but you did look at Hawksmoor coming over here.
Yeah, we did. Yeah.
And it didn't happen.
Yeah. I think Hawksmoor is as I said earlier on, it's a kind of special case in a way because it's an expensive offer. There's quite a lot to do in the UK. I think they will do some international expansion at some stage, but as to kind of whether that's another city that's more similar to London, we'll see. But yeah, they've been out. We took counsel from people here. I think international expansion you've got to do very cautiously. It's eyes open, really eyes open, because as Sammy said, it's kind of not easy. So yeah.
Okay, excellent. Thanks, guys. Well, we've got a few minutes left of the panel. I'm sure they'd be delighted to take any questions now. And of course, you can color them in the comment. There may be some microphones running around, but maybe Mark and I have got them both. So there's a gentleman here in the front.
I was, yes.
And if yes, can you tell me what was the rationale behind it and what you were hoping to achieve?
Well, the rationale, it wasn't driven by me. Renee said, wouldn't it be fun to go to Japan? But what we realized is that when you do something that's finite, there's going to be demand for it. Right? Every day, we're lucky. In Copenhagen, every day we have 600 people on the wait list. And we know where those people are from. So we knew that there would be demand for it if we went overseas. And because it's a finite period of time, right, companies will do buyouts. People want to be associated with it. We did deals with airlines, we did deals with hotels, so that our fixed costs were exactly the same as if we stayed open in Copenhagen, but we could charge a lot more. And it was an amazing exercise for the team, both in creativity and inspiration. It was commercially successful, it was critically successful, and it was, from a team building perspective, incredibly successful.
And do you intend to make a ritual out of it annually? Also?
We're looking at it, potentially.
If I can see through the lights, are there any other questions?
Yes.
It's direct.
Okay. Fine. Well, maybe, guys, we'll just wrap up. If there's sort of one key sort of message you'd like to leave the audience about their, thinking about the investment roadmap, what would that, or one plea to, to people who are kind of providing you with concepts, or you're dealing with the property owners, what would that be? Mark, maybe start with you.
Well, I think you just need to be incredibly disciplined. This is a very, very hard business, a very low margin business. So you have to think about the holistic aspects of the business and see if there are ways to make money outside of the four walls.
I would use this as an excuse to plea to landlords to please calm down on rents. And I think the serious point is that I've seen this before. In the 1990s, I did a rollout of a fitness club concept in the UK. And around the middle of the 90s, when gyms didn't really exist in the UK, they were all coming from the US, and everybody was kind of tracking the potential of that, mapping the UK against that market. Landlords all went after health and fitness clubs. They all signed up to expensive leases. And then the market crashed. There were too many clubs. They'd all signed up to these long leases. And there was probably 5 or 7 years before that industry kind of came again. And I don't think it'll happen to restaurants, but I'm fearful that, industries where there's a bit of a bubble going on and they're kind of quite cool and everybody's piling in, and then the landlords are, encouraging people to sign ever more expensive rents. I think there has to be a note of caution, because I'm frankly surprised that I thought it was London where this bubble was really But talking to Sami, it's here as well,
New York.
and New York, yeah. And I just think that is something that's kind of brewing up that can be very damaging. And what can happen finally, if you're not careful, is that the whole business model can change. So, this model financially, the maths is return on capital. It's how much cash flow you can generate from a certain amount of capital deployed in a restaurant. And if the rents all of a sudden are kind of X% higher, then it changes that maths, yeah, and it messes it up, and it kind of makes it a less attractive investment proposition. So that may take a few years to play out, but my plea would be to the landlords to just calm down then.
Okay.
I would say to investors in the region who want to go into this business or want to, whether it's buying existing businesses or franchising, do your due diligence and across the board, be it the business plan, be it, look at the revenue projections, right? I mean, what happens a lot here is people will take sites without really thinking about, will it work or not? Without doing their due diligence, without looking at, is there enough parking? How am I going to trade in the summer? So on and so forth. And I think, so what happens here is everybody wants to go into the business. It's taboo to shut down your business, even if it's losing a lot of money. So you want to keep it open for ego or whatnot. And I think it's problematic. And so if you did your homework at the beginning, you would actually notice there's a lot of sites. They could look really great, but you just can't make money in them.
Yeah.
And there's one which I just turned down, which is a fantastic site at the face of it. But when we dug into it, we just could not make it work. And we tried in every which way to make the site work, and we couldn't.
Excellent points. And I think I heard at an event a few months ago, one of the senior government officials here, he was asked a question, what did he think were the biggest risks to the economy here in the UAE? And I guess it's a bit relevant to this. He said the two biggest risks are greed. And of course, at that time, we were seeing housing rents and everything sort of rising at sort of 25% a year. And security. And I think we can't ignore the fact that probably just one major event here in what is seen as a safe haven of UAE could completely transform people's perception of this market. It's the same with any country, but of course, it's if you just look at the volume of people who go through Dubai Mall, would that be the same if somebody had done something there? So probably on that sort of rather downer note. Well, thank you very much to our panelists. If you could join me in thanking Sami, Paul, and Mark for their excellent insights. Thank you, gentlemen.
Thank you.